What's going on, guys? Welcome back to the channel. My name is Tyler. This is Khaleesi. This is my sidekick for this video since she won't leave me alone. But that's all fine. Hopefully you guys don't mind. We are talking about Merrill Lynch was just fined $850,000 for hiding their short positions, essentially hiding their short interest. So this is more validation that this has been going on the whole time, that the actual short interest of AMC is much higher. As well as that, we do need to talk about a potential European Union total ban on payment for order flow. So I think you guys will get a lot of valuable information out of this video. Hit that like button for me. Consider subscribing to the channel. Let me know down below in the comment section what you guys think about this information, and ultimately, where do you think the real short interest of AMC is currently at. So let's get straight into this video. This tweet says Merrill Lynch was just fined $850,000 for reg show violations that are primarily focused on improper netting of positions to eliminate FTDs. Action says FTD obligations were reduced while short positions were not. And if we do click on what was actually said, it says from September 2013 until July 2016, Merrill violated Rule 204 of Regulation Show and FINRA Rule 2010 by improperly netting the trading activity of 5 affiliated broker-dealer customers when determining their closeout obligations and claiming pre-fail credit. In addition, from January 2005 until January 2015, Merrill violated Rule 200F of Regulation Show by including securities positions held by the firm's foreign and non-broker dealer affiliates when calculating the net positions of 2 independent trading units, also known as aggregation units or AGUs, from January 2005 until July 2017. Available under Rule 204E, Merrill then applied the resulting pre-fail credit to reduce the number of shares it bought to close out FTDs, resulting from the correspondence trading. Merrill's application of the intraday approach applied pre-fail credit without regard to the correspondent's respective pre-settlement purchases and short positions, and allowed the correspondents to use purchases made by another correspondent to reduce their closeout obligations when they had a short position in the purchased security. So to put this into plain English for you guys, Merrill Lynch for many years was using different trading strategies with options derivatives to ultimately hide their short interest. Now, we know this has been happening with AMC. The question is, how much has this been happening? And I do believe this has been happening a lot. But what is also very interesting about this is another tweet. It says there are a few interesting nuggets in this action. For an example, it also suggests that Merrill traders use derivatives in overseas affiliates to net against short positions in the US to avoid marking orders as short. That seems like a big deal. If you click on it, it says traders in 2 of Merrill's AGUs use equity securities transactions with 3 of the firm's foreign and non-broker dealer affiliates as it is integral parts of their derivative trading to hedge exposure. However, from January 2005 until January 2015, Merrill did not exclude the trading positions of the affiliates when determining the AGU's total net securities positions and whether the AGU's orders should be marked long or short. So essentially, a lot of data was not getting reported as short positions, or just not being reported whatsoever. So I think that is big to really shed some light on, and I think it just provides, like I said, more credibility that AMC's short interest is likely much higher, and we will touch on that right now. If we are getting the estimates from the 85% of prime broker dealers, I do think that if you include the FTDs that are being hidden, the short interest that is being hidden, the failure to deliver, essentially the naked shorts as well, the short interest of AMC is well over 40%. That is another reason why everybody should be so bullish on AMC if your conviction is bullish. I am very bullish on AMC. I continue to buy more shares almost on a daily basis. So that's the story here. About 20% is the bottom baseline. I would estimate really in between about 40 and 80% when you factor in all of those other things. Now let's move on to the European Union potentially banning payment for order flow in the EU stock market. Now this says payment for order flow, a practice critics say has fueled bouts of frenzied retail share trading on Wall Street, should be banned in the European Union. France stock market regulator said on Thursday. In the United States, stockbrokers have touted for business among retail customers by offering zero commission services, with payment coming from sending the orders to a specific wholesale market maker for execution. Robert Pfof, chairman of France's AMF securities watchdog, said the situation was even more complicated in the EU due to the lack of a single market regulator. And that's, obviously not a great thing. We have the SEC. They essentially don't have anybody. It says, in quotes, "I am strongly inclined to favor the clarity of a ban for payment for order flow," Orfel told an event held by European markets industry body AFME. So the way he is talking about essentially banning payment for order flow, coming out and saying that they should ban it, is different from what the SEC is saying they are looking into possibly banning payment for order flow. So all in all, it does look like France is going to start this initiative. It'll be very interesting to see if the whole European Union does ban payment for order flow. They would not be the first country to do so. The UK, which is a part of the EU but has their own stock market, they have banned payment for order flow, as well as Canada, probably for these reasons of fraud manipulation that has went on in these marketplaces. I could only imagine in the EU, since there's not really anybody regulating the situation. But what is very important from that is, if the EU does do this, Canada has done this, the UK has done this, we are more inclined to follow in their footsteps and to do this as well. So I do think this is a step in the right direction if you are somebody that does favor banning payment for order flow altogether. Hopefully the alternative is not going back to a fee-based system. I don't know how else, people would be compensated, or these brokerage apps, brokers would be compensated, but we will discuss that on a further day whenever that situation does arrive. Like I said, just to clarify, I think the real short interest, including the FTDs, the naked shorting, the failure to deliver FTDs, as well as just the synthetic short positions, is in the neighborhood of 40 to 80% of the overall float that is outstanding. We know there's a lot of naked shorting that still does go on with AMC stock, and ultimately they have these strategies that they can hide the short interest as well. So that is going to be all for this video. Hopefully you guys got some value out of it. If you did, drop that like on the video, consider subscribing to the channel, as well as let me know down below in the comment section, what do you guys think about all this information? Is a ban on payment for order flow in the United States coming in the near term future, as well as what is the real short interest of AMC in your guys' opinion? Also, if you guys do want to directly support the channel, check out the two links linked down below in the description for free stock with Public. They do not use payment for order flow whatsoever. You get up to $70 in your choice free stock. It only takes about 3 minutes time to sign up and receive your free stock. It is by definition free money. You can also link a debit card, not the whole micro transaction you have to do with other brokerage apps. So it is very convenient to fund your portfolio as well, but that is not needed to get your free stock, as well as get up to 4 free stocks worth all the way up to $2,600 last time I checked with Webull. Don't mark my words on that, but deposit $100, get those 4 free stocks. You can't go wrong by doing that. And they also do not route most of their order flow to Citadel. It actually goes to other market makers. Now, also, if you guys want access to all of my trades in real time, check out the link for the buy and sell alerts. It literally pays for itself. We do it all: swing trade, day trade, make long-term investments in stock, options, and or crypto. So with that being said, guys, you guys enjoy the rest of your weekend, and I'll see you in the next video.